The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
So joining us now to discuss the crypto markets is Antonio Juliano. He is the founder and CEO of crypto exchange DYdX. Good morning, Antonio.
Hey, thanks so much for having me.
Good to have you on. So obviously we're seeing this dip. We do want to talk to you about all the crazy things happening in the markets, also what's happening with you. But first, we are seeing this dip below 19,000 today. We saw it fall below. Everybody in the markets wants to know this: how much more downside can be expected?
Man, I don't know, to be honest. Obviously, there's been a huge downturn recently. I think one of the pieces of good news for us is the exchange business is a relatively good business to be in, whether the markets are going up or they're going down. Obviously, there's a lot less overall trading volume in the markets these days, so that hurts us and all other exchanges. But yeah, don't have a great view on the macro environment for crypto, but we'll keep building away through the bear market.
Yeah, Sam Bankman-Fried of FTX was saying that there are probably other exchanges out there that are facing solvency issues right now. So what have been the effects, though, on DYdX in terms of volume, in terms of what customers are doing, since sort of everything imploded along with not just with Terra Luna, but with the markets in general falling as much as they have?
I think the biggest thing is, like I was saying, the trading volumes across all crypto exchanges are down. For us, what that meant is about a few months ago, we were doing an average of $2 billion in trading volume per day on DYdX. Fast forward to now, it's more in the range of 750 million per day or so. And I think that's pretty standard with what you see across the space. You kind of talk about SBF's tweet where he references a lot of potential crypto exchanges going bust. I think one of the cool things about DeFi is that it's transparent, and DYdX is in no means bust, and that's very much auditable on chain. So we're in a good spot.
So Antonio, it's really fascinating that in this environment, you are basically going on to the Cosmos blockchain and abandoning ETH in the process. And so I'm wondering, what was the thought process in doing this and the timing?
Yeah, absolutely. So first of all, the product that we're building with V4 is a standalone blockchain. The Cosmos ecosystem is a technology that enables you to build your own blockchain in a really efficient and kind of cookie cutter way. So that's the thing we're going to be building for V4. With V4, our biggest priority was fully decentralizing the DYdX exchange. Currently, DYdX V3, which is the current DYdX product, is built on top of a layer 2 rollup in partnership with Starkware that rolls back up to Ethereum. And then, as you mentioned, for V4, it'll be a standalone blockchain. The biggest things that drove us to make that decision were a combination of wanting to provide really high performance for the exchange. So currently, DYdX V3 processes about 1,000 transactions per second, and that's beyond the scope of anything that any blockchain can handle. So with DYdX V4, the core innovation that we came up with is to run an off-chain but decentralized order book. And that's something that's uniquely possible through the Cosmos technology and building our own chain, which we're calling the DYdX chain.
You're also moving away from StarkX, which has a revenue share model. Was shedding a revenue share model also a reason to move toward Cosmos?
No, I wouldn't say that was a major consideration at all. In fact, Starkware, the main thing they were pitching us on was moving to their StarkNet product, which wouldn't have involved a revenue share at all. For DYdX, the main thing that I've always been really big on is building the best possible product. And we really believe that V4 and built on the Cosmos technology gives us the best chance to build the best possible product. So we'll always be motivated by that rather than any particular profit margins or other considerations.
So just going back to sort of the larger market woes here, it'd be interesting to hear your perspective from an exchange. Is one of the main problems that the market is just not liquid enough? I mean, this has been something that people have been saying for a long time, and it seems like now, that's starting to really become more apparent.
Yeah, I think that is a problem. I think liquidity is something that builds up over time. One of the things that I and a lot of other people have been excited about recently in the crypto space is there's been a really good influx of professional trading firms and professional market makers. But even with that being said, there's been a huge reduction in liquidity since the prices have started tumbling, and especially a huge reduction in liquidity, both on DYdX and major crypto exchanges like Binance and FTX. Especially post the Terra Luna collapse. I think there's just a pretty pervasive feeling of fear right now, and market makers are no exception to that. And I think that does exacerbate some of the tumbles on the way down.
Can you also walk us through, in moving to Cosmos, like what were the challenges of Ethereum that made you want to make that change?
So I think the biggest issue is what I kind of referenced before. We're a very professional aiming DeFi application. So we aim to make the best possible product for institutional trading firms as well as prosumer users. And to do that, we felt we needed to make an order book based exchange. And order book based exchanges require very high throughput. I kind of touched on this roughly 1,000 transactions per second that we're doing right now. And that's just orders of magnitude higher than any blockchain technology can support right now, even rollups. They're more in kind of the 50 to 100 transaction per second range. So if you're talking about 1,000 transactions per second, that's just well outside of the range that any chain can support. And as I touched on before, the biggest insight that we had is Cosmos is a technology that enables you to build your own blockchain. So what does that mean? It means you're building the actual node software for the validators, which are sort of similar to Ethereum or Bitcoin nodes, but in a proof of stake world. And because you're building that software, you can build other types of responsibilities for the network to do into that software. And what did we do? We used that technology to basically build an off-chain but decentralized order book into the validators that power the network. And again, we couldn't have done that unless the DYdX network controlled its own validators. And that was the biggest thing that drove us to moving to Cosmos.
You were also previously a staff at Coinbase. I believe you were a coder there. And so I wonder what lessons you brought or things that you just wanted to improve at DYdX. And do you see DYdX surpassing Coinbase and even Binance in volumes one day?
Hopefully one day. That's the major goal that I always kind of talk about, is wanting DYdX to be one of the biggest crypto exchanges, but specifically in 3 to 5 years from now. I think there's a long way for DeFi to go, both in terms of technology, product, and user adoption as well. I took a huge amount of positive lessons from my time at Coinbase, and I really appreciated it. Actually, Brian and Fred, the two co-founders of Coinbase, were two of the very first investors in DYdX, so we have really great relations to this day. I think you see Coinbase being an early adopter of a lot of things that are being built in DeFi and very supportive of it. But I think if you look at DeFi, like, why are we doing this? You can, I think, build better products in DeFi than you could in a centralized way, and just from a fundamental technological basis. DeFi just represents a really huge opportunity to make better products in terms of equality of access, in terms of transparency, in terms of reliability and security. And that's kind of what got me excited about building DYdX, and why we're still excited building to this day.
Is there any concern out there about how centralized crypto exchanges are making things more centralized in the crypto space compared to the decentralization that is going out there?
Yeah, it's a good question, but I think I would point to, where is finance even outside of crypto at this point, right? It's not even possible to build a decentralized exchange in the traditional financial world. So most of finance is super centralized. It's built on a huge system of intermediaries. There's tons of need for regulation because of that. But if you fast forward to DeFi, like I was saying, it just enables something that was fundamentally impossible before, where you can build a system that's powered by code, not operators and not people. And I think that was just fundamentally impossible before.